You see the world as a dynamic, nonlinear feedback system, and you consider the human behavior or the reaction to what you do, then you're much more sophisticated, and you start to realize the simplistic linear models don't work. And you have to consider human behavior and economics and urban planning and business planning.
Hey guys, welcome to Everyday Finance. Michael Saylor does not pull any punches about his argument. He contends that fiat money is not only flawed economically, but that it is also corrupting the very foundation of society. As far as he is concerned, inflation stealthily takes away wealth, encourages irresponsible behavior, and punishes those who think about the long term. Trust is eroded. Institutions are weakened, and division is fueled as a result of this over time. Not only is it a matter of poor policy, but it is also a matter of a system that encourages deterioration. Saylor is of the opinion that Bitcoin provides a solution, which is a hard, incorruptible currency that provides the financial system with the restoration of its integrity, discipline, and fairness. What he is revealing goes much further than economics. It is about repairing the broken incentives that are at the core of modern civilization. Be sure to stay around, because what he is going to say next will alter the way you think about money and the future.
What can you buy? It's like, can I buy real estate? And the answer is, well, real estate just doubled in value over a few weeks because Jerome jacked the price of interest to zero, so that's not good. Can I buy a portfolio of stocks? They just went to an all-time high because we jacked the interest rate to zero. That's no good. Can I buy a portfolio of collectible art? Oh yeah, good luck with, like, how do I find $500 million of Picassos and Monets attractively priced? That's not, and by the way, we're struggling with, you're looking at a guy after 30 years in business and an engineering education, reasonably educated, but not a classically trained economist, not an Austrian economist. I am struggling with the time-honored question, what is money? I need a liquid, fungible asset which will store my economic energy for an indefinite period of time. And so what is money? I'm looking for money. And eventually I get to gold. And I'm thinking, should I buy $500 million of gold? And, my attorney, he looks at me and goes, Mike, I remember when gold was $800 an ounce back in the 70s or the 80s, and then it went nowhere for 20 years, and you should be careful about that. And it might not, it's kind of dead money. And then so I'm sitting at this table and I'm watching the world burn while all the Wall Street guys get rich and the talking heads on CNBC say what they're saying. And I'm looking out at Miami Beach and I'm looking at Collins Avenue, and every car is there's no cars on the road except for an Amazon truck, which just makes me angry. One Amazon truck going by. And I've got 82 birds in my backyard and they're hunting for worms because all the restaurants in Miami Beach shut down. So whoever was feeding them is not feeding them. So I'm watching us strip the world back to the Stone Age, right? A devolution. And I'm staring over my pool and I look at Eric and I say, Eric, tell me about that Bitcoin thing again. And Eric was a crypto entrepreneur and he had been investing in digital assets and crypto, and I had dismissed him 2 years earlier in 2018. I was like, oh, that's probably just a scam coin. That's going to collapse. But, everybody finds this when if I tell you got 6 months to live, you would go looking for a cure. And if I told you every asset that you hold in Canada is going to be seized from you within 6 months,
that could happen.
You would think about how you're going to get your money out of Canada.
Yeah, we already thought about that.
And the point is, you didn't think about it for the 20 years of your career when it just wasn't the priority.
Yeah.
And then when you're faced with a crisis, a challenge, you start thinking. So I said, Eric, tell me about that Bitcoin thing again. And he started describing it. And I started thinking, how can I get more information on that? And he said, well, you can go and watch this podcast, and you can learn anything on YouTube, right? You can learn it if you want to learn. All right. I learned a lot from you on YouTube. I learned a lot about diets and ketogenic diets and the carnivore diet. And I learned a lot about food politics, and I learned a lot about psychology. And also I started studying up on crypto, and I started speed watching and intensely watching. And I went and I saw the work of Andreas Antonopoulos, and I saw the podcast of the early crypto developers, and I started looking for the books, and I read the Bitcoin Standard, and I got quote unquote dragged down the rabbit hole, and I came to the opinion that that the solution was a non-sovereign store of value bearer instrument, of which gold had been the best of those.
Yeah.
But then I applied my engineering mind, and I thought the way Heinlein would have thought about it, and I said, okay, over a long enough timeline, what's the mortality rate? Okay, short, people that think short time think about weeks or months or years. I thought, well, let's try 100 years. I looked over 100 years, and I realized that at a 2% inflation rate, and that's the rate at which we mine more gold. At a 2% inflation rate, that means the half-life of gold is about 36 years, which means that the value of the gold you hold is cut in half 3 times over 100 years, which means that if you started with the 100, you ended up with 12.5% of the money you started with over
Today, the cryptocurrency market is ablaze, with the total market cap reaching $3.41 trillion, a clear indication that investor confidence is rapidly growing. The market cap has increased by 3.9% to reach this level. A perfect storm of institutional inflows, bullish technical signals, and shifting market sentiment are all contributing to this surge in the market. Digital asset investment funds have been receiving new capital for the 7th week in a row, with a staggering $11 billion making their way into these funds so far. A strong indication that big money players are increasing their exposure to cryptocurrencies is the fact that Ethereum alone attracted nearly $300 million in the past week, bringing its total inflows for the past 7 weeks to a total of $1.5 billion. Despite the fact that macroeconomic uncertainty is beginning to decrease, institutional appetite is clearly increasing. However, that is not all. The price increase that occurred today was also generated by a significant short squeeze. A total of over $451 million worth of cryptocurrency positions were liquidated in just 24 hours, with a total of $391 million coming from the crushing of short positions. The combination of increasing demand and forced liquidations is driving momentum across the board, and there are no indications that this momentum will slow down in the near future.
These all became dominant digital monopolies, and they became dominant because Apple could ship a new feature to the iPhone over the weekend to 1 billion people for the cost of the electricity. And before Apple, you would have to, Kodak or Polaroid or fill in the blank, would have to create a new device. It would take a year, and then they would have to sell it, and it would take another year, and there's a variable cost to it. So when the functionality becomes software, there's a 99% gross margin, and you can give it to 100 million, 1 billion, right? Apple could do Apple Music and give it to 1 billion people.
IP ownership matters.
Right, and so they dominated the rails, and they had these. I used to say Apple's going to be the most valuable company in the world because it's the most valuable company in the world, because it's the first time one company could deliver a feature to 1 billion people overnight. Now, we never had that 30 years ago or 40 years ago. So there are all these natural monopolies that built, and at some point, Microsoft dominated, business software. And first grade, my parents told me they'd give me a dime for every book I read, and I had a comic book addiction. So one summer I read 100 books and won some reading competition. I started reading in first grade, and that led me to a love of science fiction and fantasy, especially science fiction. And I read the big three, Heinlein, Clarke, and Asimov. And my entire generation, Elon Musk, Jeff Bezos, a lot of us were influenced by that. The idea was build a computer simulation that shows what happens if you change the dynamics of a traffic system in a city. I mean, the classic example is I build a beltway around the city and I build a hub and spoke system and I build superhighways because I want to speed up travel time. But invariably what happens is the city increases by a factor of 10 and the travel times go back to what they were. Because of the feedback, right? If you built the roads and then no one reacted to it, then you would be able to get around faster.
Yes,
but
and the world would be a much simpler place.
Another classic example is, you remember the Club of Rome study, they declared that the world was going to run out of resources within 10 years. And they declared it because all the oil reserves were for 10 more years. But if you thought about it, you would realize that an oil company only has an incentive to identify 10 years worth of reserves, and everything after that's a diminishing return. So we always have 10 years worth of reserves. And so you see the world as a dynamic, nonlinear feedback system, and you consider the human behavior or the reaction to what you do, then you're much more sophisticated and you start to realize the simplistic linear models don't work. And you have to consider human behavior and economics and urban planning and business planning. And so I studied that. I did my thesis in it. I started building computer simulations. I learned from the computer scientist in the School of Management. I got very fascinated in the school. I got very interested in politics, philosophy, economics. I ended up taking another degree in the history of science. And so gold, although it's quote unquote sound money, and in the Austrian economy school of thought, it was the best money, it's not perfect money. The reason that you had stable prices throughout the gold era, the gold standard age, is gold was inflating about 2% a year. And the economy is growing 2% a year. And so if the output of goods and services grow at the rate of the money supply, the price is constant. Okay? If the money supply is fixed and the economy grew 2% a year, prices will fall 2% every year. Right? And by the way, in technology, when you look at technical products where the company grows productivity faster than 2%, in a gold world, the price would fall very fast. Okay, so what's going on is there's a race between productivity and money supply. And if I can drive the price of the product down 20% a year, I can inflate the amount of money 10% a year, and the price of that thing will fall 10%. But if I didn't inflate the price of money, it would fall 20%, you see. So I looked at gold. I said, I need something like gold. But the problem with gold is it's a conventional asset. It had kind of recovered a bit. And I thought, it's not perfect. It's the best idea in the 19th century. And it's not quite working in the 20th century. And so I started thinking, what if someone designed digital gold? What if now we go back to the engineer saying, can you perfect gold? And the engineering idea, how do you fix gold and make it perfect? Well, you make it impossible to mine anymore. And then we get into the fantasy thing. What if God came down, and there's a bit of theology here, if you allow me. If God came down and wanted to fix gold, it's impossible to make any more gold, right? How can you make it better? It'd be really great if it was weightless. How do you make it better? I'm going to cast a spell and allow you to teleport the gold anywhere on Earth. If God said, I'm going to implement a system of 21 million gold coins, but we're going to call them God coins, and I'm going to keep them in a bank in heaven, and I'm going to let you transfer any amount. I'm going to let you subdivide it by 100 million, and we'll call them Satoshis. And I will let you transfer peer-to-peer and pay anybody, anytime, instantly at the speed of light, and I will keep track of the ledger of who,
The most recent market activity is evidence that Bitcoin is becoming increasingly popular. as traders rush to close their bearish bets, a classic short squeeze that resulted in the liquidation of nearly $196 million in Bitcoin short positions is sending prices skyrocketing. All technical indicators are flashing green at the same time. A rising RSI, a golden cross, and a breakout from a bull flag all indicate strong bullish momentum. Now, analysts are focusing on a possible move toward a market valuation of about $4.36 trillion, which is almost 30% higher than it is now. US investors are one of the most telling indicators of renewed strength. On June 6th, the Coinbase Premium, which measures the difference in price between Bitcoin on Coinbase and Binance, reached approximately $19.55, its highest level since February. That increase suggests that American consumers are becoming more demanding. Additionally, this rally seems to be well-founded, in contrast to earlier ones that were fueled by hype. According to CryptoQuant, there are no significant indications that the market is overheating, indicating that this momentum is natural and long-lasting. The severe supply shortage that is currently occurring is further driving Bitcoin's growth. The withdrawal of more than 550,000 Bitcoin from spot exchanges since July 2024 usually indicates long-term holding rather than selling. Such a reduction in supply creates a solid basis for price pressure to rise, particularly when combined with increased demand. Institutions are also back in full force. While Bitcoin is trading at about $110,000, BlackRock's iShares Bitcoin Trust is breaking records as the fastest ETF to reach approximately $70 billion in assets. When you combine short liquidations, bullish technicals, rising demand in the United States, supply drying up, and institutional FOMO, it's obvious that Bitcoin is poised for explosive growth as it enters the second half of 2025,